I want to start off with the spinoff. Raj Subramanian, he clearly went out of his way to assure investors that even with the spinoff and freight being a separate company, it's going to still work with the rest of FedEx, the parcel business and everything else. Do you have any questions about execution in the spinoff? Some of your colleagues put out some notes raising those questions yesterday.
Well, I think the challenge is really going to be staffing the company and what the costs are going to look like. So right now, we have an idea of what FedEx Freight profitability is. That's a segment that actually missed a bit based on weakness in the domestic economy. And I think investors are really questioning, how much additional cost needs to be put in there and what could those pro formas look like. The market right now is trying to struggle with what's the sum of the parts valuation look like. If we take freight, how do you value that? You take the RemainCo, how do you value that? And when you think about those weaker numbers, adding in some additional costs, there is some real questions, I think, building around how this is going to work and what ultimately the P&L of the spun-off company is going to look like.
I was talking to some of your peers, again, a number of other analysts. They said this is one of the most important quarters for FedEx in years. But you got to keep in mind, we've had the pandemic. We saw Raj Subramanian take over as CEO. I mean, we've had a lot of big events over the last few years. For this to be such an important quarter, it really puts a lot of weight on it. I'm going to show a chart right here since Raj Subramanian took over as CEO of FedEx. We're also going to show UPS in that same chart. If you see, FedEx up over 30%, UPS down about 30%. Is that kind of a report card on the performance of Raj Subramanian, the job he's done? Is that a read on UPS in your mind? I mean, what does this chart tell us?
Well, you have a lot of stuff going on during that period of time that is very specific to either company. I think what the chart's telling you is that with respect to FedEx, the market likes what it's hearing from the new CEO about prioritizing shareholder return. For decades, I think the market had looked at FedEx as maybe a private company with a few public shares, doing what it thought was good for itself, spending a lot, putting a lot into CapEx, maybe not focusing as much on returns and returns to shareholders. Raj and his team have really kind of, with this decision to go ahead and go forward with the spin, underlined the idea that we are making decisions with shareholders' interests first. That's a tremendously positive inflection, I think, in the story from an institutional investors' perspective. When you think about UPS over this time frame, they've had a pretty significant shift in their cost structure because of the timing and the structure of their Teamsters deal, which happened during this period. The difference there, I think, is with UPS, I think on the domestic side, they've got much better visibility into lower costs going forward because of the way that contract had pulled forward costs. So the historic performance is, I think, a little bit less a reflection of the market's perception or grading of the managements of these companies, and more the recognition that there's been a positive change at FedEx, and some concern about how UPS is going to be able to manage that bridge with the new cost structure.
One last question for you. I want to look at the LTL sector. We're looking at some other LTL trucking stocks moving higher. Again, FedEx planning to spin off the biggest LTL player in the U.S. Right now, you're seeing XPO up 0.25%. Old Dominion was positive earlier. Now it's kind of moved down fractionally. Saia up fractionally. What does this spinoff mean for the broader sector when we're talking about less than truckload trucking, specifically when it comes to competition and pricing?
Well, I think, there's a view in the marketplace that FedEx Freight, being a part of the bundle of the broader FedEx Corporation, maybe hasn't been as disciplined when it comes to setting rates, when it comes to managing its capacity. So there certainly is a view that a standalone freight that's focused on its bottom line will have to make some more commercially oriented decisions that are going to be good from an industry perspective. FedEx Freight is, however, going to be adding about 300 salespeople during this transition process before it goes to become a separate public company. And that maybe doesn't say that they're going to be as much of a share donor maybe as they've been in the last couple of quarters, because if you look inside of the numbers, their volumes are underperforming the broader LTL marketplace. And if they become a little bit more aggressive, a little bit more share focused, that's really what we're going to need to be watching. The willingness to be more disciplined, maybe have to rationalize some capacity, versus the desire to maybe try to take some share to write the numbers prior to the eventual spinoff.